Hi, folks. This is Bob Desmond over at the Contrarian Trader. I'm taping this on Tuesday night, November the 1st. So I'm kind of putting myself out there with this analysis in advance of the markets not being open and unaware of where the market will be trading. I have this time to automatically get sent out at noon on Eastern Standard Time in advance of the Federal Reserve meeting, which I really don't expect much to happen. But there are trades out there to be had because I think there's a fairly seismic shift that's going on. And I've been speaking about this with members for quite some time. We're really in unprecedented times. And what I think is going to come back around again are the trades in the commodity space because inflation is on the rise. We have stagflation. I've been talking about stagflation for quite some time now. And you can even go back on YouTube. I posted a video several weeks ago about stagflation. Nobody else is talking about it. And now it's on our doorstep. So we have the US dollar, which is at a very strong second half of 2016. It broke out back in October, but last week the shares began to break down. This is the UUP, the bull tracking fund for the US dollar. And today we bounced off of critical support. Now, why is this critical? And why does this matter? The dollar, when I'm talking about commodities, it's because commodities and the gold stocks, they trade inversely of the US dollar. So when the dollar goes down, gold, silver, the gold stocks, they move higher. And when you overlay the US dollar and gold, you can see it's exactly the inverse. Every once in a while they trade in tandem, but it is truly the exception that happens. So the US dollar bounced off of critical support, which was the pivot point back in July for this double bottom breakout. And we pierced and closed above it in early October. And here we are, we've retraced the entire move back down to the pivot point. So critical support, because we know from technical analysis that if you get a breakdown below a prior breakout point, that's a breakout point failure or a bull trap, meaning the shares did not have the institutional support to keep it above a breakout point. So it's critical that the UUP or the US dollar hold today's lows. Now, what do I think is going to benefit in the coming days? Let's go over gold, the GLD. It broke out today above the upper band of its rising uptrend channel. I was never a big fan of this uptrend channel. It was more of an ascending wedge formation to me. And I was more concerned about a breakdown in the short term and then a reversal back. I had expected a retrace down to the 118 level, and I'm not entirely convinced that we won't get that yet, but it's looking better for gold. I must say that, given the performance of the US dollar. Do I believe the US dollar is going to go straight down? No, I do not. I think they're going to put up a defense. So in the short term, as that defense gets put up, I'm going to look for a pullback on gold and quite possibly a filling of today's gap. But what does that mean? It means that we will have a failed breakout. Unless, of course, we have a very, very strong down morning and early afternoon and then rally back to close above the support level. That would be a huge, huge buy signal. But it's also asking a lot. Also keep an eye that we closed below, but we hit it today, the third standard deviation Bollinger Band. We're very close. So the chart is looking better, but I'm not ready yet to go jumping in and buying gold. But soon. Volume, very strong. Silver. I own silver in a leveraged ETF. It popped higher today. I did not add more. And you can see that we bounced right off of the declining 50-day moving average. That's a declining ceiling. So it's going to be difficult for silver to get through it. So what am I expecting? Probably a pullback and a refill of the gap. The GDX, very similar price actions to what we saw on silver, believe it or not, rather than gold. The shares rallied higher out of this bull flag formation, but bounced off of its 50-day moving average, which is beginning to flatten out some. We are already long of the gold mining names, and I will be sending out alerts to members when we build on our current position. We are not currently long of gold, but we will be looking to open a new position. And with silver, I am long of a leveraged ETF. which puts you 3 times long of silver, and we'll be looking to build on that position, but at a good risk to reward entry point. All of the indicators on these charts are looking strong. Now it's a matter of, is this rally in the short term for real? And also, is the dollar pullback just that, a pullback? Will today's support level hold, and will we rally back to make new highs? I don't think that we will. I think the odds favor the longs in the commodity trade, and the dollar isn't looking as strong as it once did several weeks ago when everybody thought we were going to have further tightening over in Europe, and that doesn't appear to be the case. So, members, more to come, and we'll see how my analysis plays out after the Federal Reserve meeting. What do I expect there tomorrow? I expect a typical knee-jerk reaction, which is generally wrong by the market. I don't expect a Fed move, and if anything, I think they'll sound fairly dovish because the Federal Reserve wants Hillary, and they want the market to rally. It does them no good having the markets in a free fall heading into an election. So if anything, I think that they will be dovish, which is bearish for the dollar, bullish for gold, silver, and the gold stocks. Members, more tomorrow.